Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage the risk. I'm your host, Jim Matthews, reporting from the Chicago office on what is a lovely summer Monday morning. Joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley. Jake, how are we today?
Doing very well this morning, Jim. How are you?
I'm doing very well, thank you. It was first day of school, so kiddos returning to school here after a delightful summer. So nice to hopefully return to some sense of normalcy, whatever your definition of normalcy is. How about Kansas? Are kids back in school in Kansas?
They're going back. I think they had a handful go back last week. The rest will go back this week. It's supposed to be cooling off here in a handful of days. So feels like it's about that time of year.
Okay, excellent. Well, that's good news. And Jake, perhaps nothing's more important than our children, nor the education of our children. But there's also football coming back here. And I watched some preseason football last night. You know, backup Bears looked good against backup Bills. I think we're going to get some backup Bears versus backup Chiefs.
I think so. Pretty quick here. Yeah.
I think so. And then we'll have the real deal here coming up in just a few weeks. That's pretty wild. I'd like to think that maybe there's hope here in Chicago. Maybe. I know you have a little bit of hope in Kansas City.
I've got a little bit of hope. And we get started a little early. We got the Cats going live on Saturday, just a handful of days from now.
Hey, now, careful. Okay, here we go. Well, it's a fun time of the year here, but also it's a fun time for these markets. We got to chat some of those wild little facts that we got from the USDA last week. But you were also boots on the ground in the Eastern Corn Belt last week, weren't you, Jake?
That's right. Started out in Indiana, did a little bit of Northwest Ohio, and then kind of trekked all over the state of Michigan, talking to dairies, talking to a few grain producers, getting a little bit of a look at the crop there. And things look pretty good up there. You know, that part of the world might be on the lower quality end of the spectrum for all of the grain belt, and yet it's still overall looks like a pretty good production year up there, especially for those guys on corn. So it passed the eye test from the road. Conversations with folks where they were expecting at least average. I think some of them feel as though they may go to chopping silage a little bit earlier than usual, maybe a week or 10 days or as much as 2 weeks ahead of normal. Starting to get out into the fields maybe the last few days of August or early September, as they kind of had a pretty hot and dry spell here to start off August, and that corn has dented, and they want to make sure they get it at the right time and get it piled up. But expectations for most are that quality will be good and yield will be at average or potentially better. So we'll talk a little bit about some of the numbers we saw in the WASDE, but those folks over there getting started on silage harvest early might give us a little bit earlier peek at what this crop is doing than we're used to getting.
Okay, yeah, I think that will be pretty interesting because, Jake, as we've noted during some of the crop condition reports that we get every Monday afternoon, I mean, that Eastern Corn Belt has been, let's say, you know, the anchor on how high those numbers could have been for crop conditions, because we talk about the Iowas were in the 80s in terms of the, you know, good to excellent conditions. I think we had, you know, Nebraska up near 80. We had South Dakota up near 80, Minnesota. So that's combining those good to excellent condition ratings. But then you had you start moving into that Indiana, Ohio, Michigan. We're talking more like 50s and 60s there. So I think it would be a pretty interesting bellwether to see if they can still, with those conditions, pump out a fairly sizable crop. Because then as we fast forward to what we will discuss with our WASDE report, I mean, the crop production report from last week also indicated Indiana is still looking at a 200 bushel per acre corn yield, right? I mean, still looking at a fairly sizable crop coming from that area. So it will be very interesting to see what comes out of there. So yeah, Jake, glad you had a nice week out there. I guess before we touch on this WASDE report, we'll have to ask Lexi to please kindly timestamp the broadcast because it's actually Monday morning. We were both on the road last week, so we took a break from the recording with all of last week's WASDE excitement. We're trying to get a jump start on the week here. So as we record, we have December corn futures up about 2 cents here. We're just over 407. So that's a return to $4 corn for December after touching nearly as low as 390 last week. After that report, we have Novi beans up 2 cents, just over 1044. So trying to make its way back up towards those mid tens versus the low tens and below we were experiencing before that report. Last week, we have December meal, that stubborn little byproduct, is down 270 at 291.80. We saw that product go from the sub 280 figures to then that WASDE report really helped provide some support back up. We saw Dece meal hit $300 a ton here last week. So it'll be an interesting one to touch on here in a bit. And then we had December oil up 15 points right now. That's at 53.38. So all of that being said, Jake, obviously the big discussion last week was the WASDE report. Jake, we went into that report, I think, with some pretty wildly bearish expectations. And now looking at what the numbers actually were, we were not wild enough, which is just mind-boggling. I think we had some pretty bold predictions heading into this thing too. And again, we based it all, not all of it, we based a lot of it off of those crop condition reports. We knew that the numbers we saw week to week meant the USDA would have been very much justified in raising their yield expectations for this crop. We felt very good about telling folks the USDA would raise yields in that report, never offer a guarantee, but we were very confident they would raise yields. I have to say, I was stunned with how high we raised yields. And we went from a 181 corn yield number in July. What I think the more bolder expectations were maybe calling for a 185, let's say, yield number, Jake, on your side. For the government to give us 188.8, just an astounding yield number for this corn crop. And we have since recovered pricing back above $4. So all that being said, Jake, let's say we're just under a week past that report. It'll be a week when this is released. But what are your thoughts here, Jake, digesting this thing after about a week's time?
Well, I spent about an hour and a half ahead of that report in a room with some of our clients talking about what we expected from the market and how we thought this report might to come together. And I guess I forecasted two things: that the USDA would be somewhat modest in their adjustments, and that if they were to reach for the higher ends of those ranges, that I would be completely shocked. And I was correct on one of those two things. I think the folks in the room saw me in a state of shock for a few minutes trying to digest the numbers. It was very surprising, to say the least. I thought I was reading the wrong report or on the wrong commodity or something for a moment. But yeah, those are big numbers. I mean, we're looking at record production. They added, between increasing acreage by about 2.5 million acres and increasing the yield to 188.8, which is what, almost 8 bushel yield increase. We plugged in an extra billion bushels of production there, and then increased demand by 500 million bushels as well, primarily on exports and feed usage. So I would not be shocked if at some point between here and the end of the year, we see more of those numbers than not revised a little bit lower. Those are some big numbers on that corn balance sheet. To me, it feels like the market has not fully bought into those numbers. They could be correct, but I think the market at this point, with that dramatic of a change, has not really departed from the $4 mark on the December contract by more than a dime yet, either higher or lower. And to me, feels like it's waiting to run some real yield data through harvest machines before we commit to one direction or the other. Right now, we're looking at a 2.1 billion bushel ending stocks number, which typically would bode well for feed buyers. And yeah, like I said, I think net, we're pretty close to unchanged versus report day. And the one that I think is going to get to be a little more interesting now will be looking at this bean crop and where they took most of that 2.5 million acres they added to corn, took it out of beans, increased yield there as well. So again, if that yield number is overdone a little bit, you're going to start to trim up what feels like an already fairly lean ending stocks number there. Healthy, but you take 1 bushel off of the yield and you reduce that ending stocks number by almost 25%. You start to get to be pretty supported pretty quick. So it was an interesting report, pretty exciting for a few minutes, and yet the market doesn't seem to have committed to a whole lot of activity around it until we get to harvest. So like I said, there's potential that we'll see some early silage coming off here in the next couple of weeks. Maybe gives us a little earlier preview of this crop than we're used to. And also I think we'll have a couple of industry tours going out and trying to collect yield data over the next couple weeks as well. So maybe those folks will give us a little better insight into what's going on and if we should be buying into the big yield numbers or where we go from here.
You nailed it, Jake. I mean, assuming the USDA would be a bit more modest than this, and then just to be stunned with what they did. I mean, to echo what you've said, we raised corn production by a billion bushels. It's just wild. And just to think about it, a week ago or so, I think we were both believers in a real shot at a 2 billion bushel carryout. And I think for us, it was you and I would spend time kind of looking at the math on this. And it was okay, we could probably raise yield by this. You probably ultimately cut demand by that. Maybe exports are too aggressive. Maybe we've capped ethanol production. Running through all these hypothetical scenarios, the USDA just came in and said, we're just moving every single thing up. We're moving production up. We're going to move demand up. We're going to move everything up and also move ending stocks up over 2 billion bushels easily. I mean, this is just for me, the market is probably just so shocked that it doesn't know how to interpret this thing, because I think if we took a step back, you could absolutely argue that the numbers that came from the USDA last week should have us easily trading below $4 corn. And yet, as we record, we are at 4.07. And we noted that we are essentially at a net unchange since prior to the report being released last Tuesday. We went down and started getting closer to last year's lows on December corn futures when we traded the DEES 24 contract down to 385. We got within a range of hitting 390 on DEES 25. So just the numbers alone, one would think we would still have a shot at that. So Jake, I mean, what are your thoughts on if a dairyman calls in today and says, Jake, did we miss the low? Or, hey, Jake, we hit the low, but is that it? Is that the low? Or do we still have a shot at going down and testing last year's 385 number? What are your thoughts?
So I think we've still got some opportunity to work futures lower. And the key indicator on that for me is that we're starting to see basis values trickle lower in a lot of, especially these rail dependent markets in the Western US. So basis out in that part of the world had been very steady for quite a while. We'd been talking about pretty aggressive bids for new crop ownership and being quite a ways away from those. And some folks even thinking, it's going to be tough to approach those numbers at all. And then 2 weeks ago, we got our first little look at maybe some folks taking speculative positions on basis out there, commercial entities being willing to go out and take a little bit of risk. And then last week after the report, it felt like there were a handful more that came to the table with improved corn basis values. And I think if you put a pretty aggressive bid in them today, you've got a real chance of buying some feed at those numbers. So if the cash market's moving lower, it feels like it's just a matter of time before the futures have to settle towards that as well. So we've got some time. again, it's hard to know just how good the crop is. And if, I talked to one dairy, well, actually they produce grain as well up there on our trip last week. And they said, I guess I could buy into this yield because the conditions that we have this year are so much better than last year. And we still had a record yield last year. So maybe it is there. And then if that's the case, I think certainly you have to put some pressure on this market, especially with the very early projections for what South America could put together next year. This thing's got some opportunity left in it. Certainly, even with these little bounces off of the lows, some good opportunity to continue to manage risk. If you do feel that you missed the bottom and you're concerned about it, there are very cost-effective ways to continue to manage this thing. So,
okay. And then, Jake, we touched on the bean balance sheet being slightly tighter, right? I mean, we did ultimately take ending stocks for beans for new crop back under 300 million bushels. And we talked about how the meal futures market did ultimately rally a bit. We came back up and tested $300 per ton. What are our thoughts on protein? I think we feel a little vindicated at the moment over continuing to say that 380 has been that threshold. We did break it here and there for a little bit over the last couple of weeks, but we're back roughly trading between this 290 to 295 figure. So it is a rebound. Has it run away from us? No. What are your thoughts on protein now as we get through this report, still trading in this range, and then as we head into the fall and what will ultimately be this bean harvest and also then our peak crush season here as we head into October, November? What are your thoughts on protein?
Yeah, so I think you said it there. I think it reassured us a little bit that we were making the right decision by taking some significant ownership down there around the 280 futures level. Basis has remained under quite a bit of pressure. It's still very attractive in most markets. Futures have done all the work in elevating price here lately. And I think that's probably a little bit of managed money. The funds trying to take some profit or reposition a little bit as this balance sheet continues to thin out a bit. Also, we extended the Chinese tariff deadline another 90 days. So maybe that's an indication that they are more willing to come to a resolution and work their way back into our trade market in a meaningful way. At the same time, the Chinese reinforced a pretty hefty tariff on Canadian canola. That would send a little more demand our direction. But I think working futures down there around that 280 mark, we got a lot of questions from folks. We went and talked to markets this last week about how far can this thing drop if we're producing so much more meal and we're producing all of this extra grain and feed. These prices got to go way lower from here. And I think we have to remind ourselves that we are in a very globalized marketplace, and at a certain low price level, this stuff starts to get bought up and go somewhere. For example, China not that long ago was very heavily dependent on tofu and poultry for their primary protein for human consumption. And then they kind of matured their market into more pork, and they've really started to lean more heavily into beef. And each of those changes requires more feed. Each one of those animals is less efficient in converting grain and meal into animal protein. And so you're getting the same amount of animal protein with less efficiency, which is going to require more demand. And these prices are attractive to step in and ensure those pipelines are there. So that's just one example of how this market tends to find equilibrium. And these historical values, even in a kind of total made over soy crush complex, these historical values do tend to carry a fair bit of weight.
Okay. Well, good deal, Jake. We ran through a lot of information there. Really good stuff, as always. I mean, I just, again, to emphasize how just that this report, I think, took us both back, and we were leaning the bearish direction on these numbers. But my goodness, we still have a lot to pay attention to, right? And the fact that these markets are behaving the way they are, as you said, Jake, I mean, the market has not bought into just how extreme these numbers are just yet. But perhaps as we start to see those numbers on the actual screens and the combine, I think maybe is when we really start to see some real pressure here on this thing as we move, into that harvest season. We're only 2 weeks away from Labor Day, which is just wild in itself. So it's happening. It's going to be happening. We've got school back in session. We've got football, and we're going to have harvest here coming up here in a few weeks. It's going to be a wild one, so stay tuned. And when you do stay tuned, we want to make sure we thank the EverAg Insights crew for their support, and to also thank Lexi for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.